Hello and welcome to Core Finance. Today we are delighted to be joined by Stephen Sanderson, the Chief Executive of UK Oil and Gas. Stephen, thank you very much for joining us today.
Hi, Catherine. Yeah, good to see you again. Good to be back.
Thank you. You've had the first competent persons report on your Loxley gas discovery near Guildford in Surrey. The valuation numbers sound interesting. Can you tell us a little bit more about this?
Yeah, I think they, in a nutshell, they can confirm what we'd already, what our own internal view, really. I mean, it certainly marks it as a material gas accumulation. It's 40 billion cubic feet or so, 1 billion cubic meters in total. Our shares, about 77% of that, 30 billion cubic feet. But I think most interestingly, it's the money numbers that go with it that's exciting for us. I mean, it is material. The mid case 2C contingent resources number is up to 124 million to us, which is very, very considerable. It's quite a number of times our current market capitalization. So it says that we have a very material project. I mean, it is a real project because it was discovered 40 odd years ago by ConocoPhillips, who are an extremely large oil and gas company. But now, of course, it's actually very economic, partly due to the fact that gas prices have gone up quite considerably in the last 18 months. A lot of it post-Ukraine war. But for the first time in history, gas prices in terms of energy equivalent are actually as valuable, or if not more valuable, than a barrel of oil. So hence, that's why we have a very healthy valuation. So that's good for us. We just like the market to recognise that a little more, perhaps. But
so promising news for UK oil and gas and its investors.
Yeah, clearly, having a material asset is good news. I think for me, drilling down into the detail, if you look in the kind of Appendix C of the CPR, you see that this thing is very cash generative. And that's mostly due to the fact that the reservoir is very high quality, so you get very high rates, so you generate good flows of money. More importantly, the pre-tax sales revenues are very high. In fact, they're high enough to pay back all the development costs, which are like 40 odd million pounds in the first year. So what that does is it means that this is very much candidate to fund in the usual way for an oil and gas development, via debt funding. I mean, the overall cash flows are really quite significant. In the mid case, our net is about 577 million pounds. The gross is 770 odd. So those are big numbers, and I think importantly for investors, shareholders, is that because of the higher rates that are projected from the well, and this is not just made up; it's based on the original discovery well, the performance of that, which has been very heavily analysed by quite a world-renowned reservoir engineering company called Kappa. I mean, this will generate in the first 5 years of production, it will produce 75% of its revenue. So that's 500 million quid in the mid case in 5 years. So for a small company having that much revenue coming in the future, and we hope to get this thing on stream by 2026. That's big news, I would say. That's a very good position to be in.
Certainly. Stephen, do you have the permissions to drill and test the appraisal well?
Oh, yeah, we do. We do. We have full planning consent. We have a full Environment Agency consent to do this program. We will get the oil and gas, used to be called the Oil and Gas Authority. Now it's the North Sea Transition Authority. Necessary permits, but that's pretty much a formality. So yeah, we're good to go. We're looking at pushing the site construction in towards the end of this year, and doing the appraisal program next year, and with a view to trying to get this thing on stream in 26 or as close as we can to it. You know, I think it's a material project for us, but I think also it's you know, it's good news for the UK in the sense that, you know, we have this increasing sort of energy dependency from imported gas, and I think, you know, domestic gas, even though this is material, but, you know, in overall national terms, it's relatively modest, but, you know, it will still produce 200 million odd quid in taxes, and that's, according to my calculations, that pays for 6,000 nurses. So, you know, it's not to be sneered at, shall we say. You know, it's good for the UK, it's good for energy security, and it's, you know, it's good for the economy.
And what about future possible uses of Loxley after the gas is produced?
Yeah, well, I think people will know that, you know, we've got this hydrogen bee in our bonnet, and we've always said that we were going to sell the gas for reforming into blue hydrogen from Loxley. And we intend to do that. But we have this very large hydrogen storage project down in Portland in Dorset. That's about, you know, its first phase is 1 billion cubic meters. And just to put that in context, it would be a 70% increase in the UK's underground storage capacity. But, you know, Loxley, it's a cash cow for 10 years and then it's fairly much depleted. So that's about, let's say, 2036. But the interesting thing, of course, it's almost, in terms of its volume, it's almost exactly the same as the first phase of Portland. It's like 1 billion cubic meters, 30 BCF is about 1 billion cubic meters. So by that time, you know, we'd really be looking to change it into underground hydrogen storage capacity, because if you look to 2030 or 2035, I mean, the country's going to need at least another 10 billion cubic meters of underground storage. So, you know, Loxley and Portland could provide, you know, 20% or so of that. So, you know, that for us is, it means that this just isn't a, you know, fire and forget project. It actually can contribute both to the, you know, near-term energy transition, energy security, but it also could become, you know, quite a backbone of the future hydrogen economy.
Stephen, finally, for today, can you tell us, how is your asset in Turkey doing?
Oh, yeah, well, that's bubbling along quite nicely. Of course, you know, tragically, you know, with the news from Turkey, the whole country had been affected, so things sort of slowed down a little bit. But you know, we reported, I think, in last month that we were planning to drill this new shallow Pinarova-1 well. And we were going to do that in the first quarter. And I can say that, well, we had a meeting about this with our partners on Thursday, and that's very much on track. And we hope to be making some announcements very soon on that. So I think that's looking good too.
Well, we look forward to hearing those announcements. Stephen, that's all we've got time for today. Thank you very much for joining us.
Thank you very much. You're very welcome. Bye-bye.
And thank you for watching Core Finance.